Dear Diary, I woke up not feeling great, but I did a smashing workout, spent some time with family, and had my favourite breakfast that placed me in a great mood. Then I placed a sweet trade. Throughout history, journals have helped the most successful people better themselves and know where they are going. Keeping a trading journal is a smart way to keep on top of things and gain confidence when going against the markets. When trading, a journal can have a positive effect on a person's strategy, psychology, and execution. So stick around as I discuss the importance of keeping a trading journal. I wish I knew the benefits of having a trading journal many years ago. Oh boy. Make sure journaling is a habit that you start religiously because this is something that could help you in the long run. It's probably one of the most useful and underutilized tools for any new trader. So hear me out, you need to record your trades every single day. Not every week or month, I mean every single day like you brush your teeth. Even if your goals are only trading one instrument a week, you need to be able to track your progress as well as study mistakes when entering or exiting a trade. A journal does not need to be limited to your trades. It can be very intimate in nature, holding very detailed and personal information. These will help answer these important questions like, how is my mental health? Am I in the right mood to trade the markets? Have I done the required homework? Among many other questions. This will help you build a link between where you are and where you need to be. If you plan on becoming a successful trader through performance, trading journals can steer you faster towards a profitable career. How important do you think a trading journal is? Well, this is one of the top factors that can determine whether you can be a consistently long-term profitable trader. So picture this. You have traded the euro dollar but later down the line realized that this could be a premature trade. You entered too early. With a trading journal, traders can develop a profitable strategy based on trading experience. Over time, the advantages are valuable for trading efficiency. You should not underestimate the ability to be able to review your trades, entries, and exits. These cold, hard facts will allow you to tweak little habits here and there, a process that can really help a trader in the long term. We know that a handsome chunk of trading has to do with emotions. Who wouldn't want a tool that could potentially manage emotional triggers? Knowing your emotional triggers could also help maintain positivity. If your trade processes are structured and journaled, this may boost confidence. Now just to make things clear, confidence plays a key role when trading, while overconfidence tends to have negative impacts, like over-leveraging and taking too much risk. In a nutshell, having a journal allows you to take note of everything you felt and learned. This practice enables you to acknowledge your thoughts and emotional triggers behind every trade. From my experience, noting the time of the day, whether you had a good meal, and your overall mood could all play an important role when going up against the markets. Knowing one's strengths and our weaknesses gives you a better understanding of yourself and how you best operate. For example, if you're an aggressive trader, there'll be times where you may be overly cautious and end up regretting it. Conversely, you can be a cautious trader and take a risk too far which can result in losses. Both of these are incidences where knowing your strengths and weaknesses could play in your favor. Documenting every trade can help define your strengths and weaknesses as a Forex trader. Through these observations, you can be your own advisor and reinforce better trading skills. It also lets you be more accountable for any errors. By acknowledging what you do best or what needs improvement, you can optimize your trading skills and incorporate them into your trading system to become a better trader. Each trader may document different things in their journal depending on their personality, trading strategy, and other factors. Here's a short list of things to consider. Trading goals and motivation, philosophy behind the trade, strengths and weaknesses, thoughts and feelings, skills acquired or skills need to be improved, emotional triggers. Remember guys, there are a ton of things to consider, and above is just a short list of things to think about. Personally, My own goal and motivation is to make a sweet 100 pips a week. I know my strengths are finding a good entry point and weaknesses exiting the trade too early, all of which I note down each time. When I'm emotionally on a roller coaster ride, whether I'm feeling nervous, excited, or self-doubt, I calm myself by listening to a classical music and hitting the gym hard. Whether these feelings are caused by my trade approaching a stop loss or reaching take profit too quickly, I make sure I keep track of these and try to learn from them moving forward. So guys, to wrap things up, in a nutshell, a trading journal allows you to thoroughly keep track of your skills, emotional triggers, and other aspects of trading you wish to measure and optimize. It is a powerful tool that can help you become a better trader. If you don't have one, what are you waiting for? So what's one thing you would have in your trading journal? Please let me know in the comment section. Remember to like, share, and subscribe. Until next time, guys, thank you.